This is NDTV, and you're watching NDTV Profit.
Hi, good morning. You're watching a special market voice. Harendra Kumar, Head of Research at CENTRUM Broking, is with us. Harendra, morning. Your first reaction to the fact that these stocks have collapsed on the auto bailout and what it means for India?
One is that, it compounds problems for the Indian automakers who are already in some of a tight spot. What typically any industry looks at is the sustainability of its vendors and its suppliers. Now they've had problems on the front end, now that they have to deal problems on the back end as well now, is because, it becomes tighter for vendors to survive in, especially in thin margins, and when they were looking at export growth, and that's going to get curtailed. So yes, all in all, it compounds things, and it's going to take some more time before a revival sets in the entire space.
But Harendra, will the problem be more acute for smaller players, as we were discussing? Most of them, even if the quantum of exposure is not much, the size of business also is not much for these auto component players. So maybe the four-wheeler players or the CV makers or the two-wheelers, the big companies do pretty much okay. Tata Motors, Mahindra and Mahindra might not be affected, but the smaller ones probably could be put in a very, very difficult spot.
Absolutely, you have the credit problem, and other is now you have the demand as well. See, what I'm saying is, in front of the, take the case of larger players, they're dependent on the suppliers to maintain their costs and supplies. Though they have been de-risked and they have multiple vendors, they will have to invest significantly in their suppliers to stay above board. I think that is where the challenge is. That's what the market is seeing.
Fair enough. Harendra, morning. Prashant also joining in. Just talking about the market on a standalone basis, not including the news flow which has come out, the negative news flow on the auto bailout front this morning. How are things looking? We've had a nice 7.5–8% sort of move yesterday. This market showed quite a bit of strength in the last closing minutes of trade. Things globally across most indices have also largely been positive. I'm talking about a 15–16 session sort of a window. You think there is still case for Indian markets to play catch up with how global indices have behaved?
Yeah, actually, if you look at it, the bright spot here is that despite the terrorist attacks and some amount of bad news on the US economy front, Indian markets have not touched newer lows. So I think that gives some amount of comfort that probably, in terms of new lows, we are there, and we are at this currently in the midst of some amount of consolidation. So that is one. Second is, yes, I think there is some amount of decoupling that we are seeing in terms of the behavior in the markets. Asian markets rallies and Indian markets do not so much. So I think to that extent we are in a way now playing out a little differently. In terms of the upside for the Sensex per se, if you ask me, is that with kind of a flattish growth from here on in 09 and 010, I don't think we should be breaking 12,000 or any upwards from here on, at least till March. So we are in a band at this point of time, from anywhere between 9,600 to 12,000, and that's we're going to stay there for probably the next 3 to 6 months.
Harendra, in terms of the announcement of a second stimulus package coming in tomorrow and the expectation of the IIP number today, how much of an influence will these two factors have on the market direction?
See, one is that the IIP numbers have more or less been discounted. We are looking at probably zero or negative growth to a smaller negative growth. So I think given the CV sales year-on-year fall, we are looking at IIP number which is not going to be so great. And the stimulus package that was announced by the government was not so big in size, and I think we need a second booster, and market anyways is expecting a second package. I think on the monetary side, that will be it'll be weighing more on the monetary side, and I think on the fiscal side, the leeway that the government has is very little. And you consider what China has done, they announced a 5 to 6 billion and compared that to the India. So I think it's low on steroids. That's what we call at this point of time, and maybe we'll need more, and hence our cautious view probably for the next 3 to 6 months.
Harendra, in terms of specific sectors, you still would largely ignore anything which is export oriented. Is that a defining criteria for you at Centrum right now? Or it's just a matter of who's got the most cash this time around to tide over the tight liquidity conditions?
Absolutely, you're going to look at cash, convergence, and consumer as probably the three themes going forward. And you have FMCG, telecom, and broadcasting, probably such kind of companies that fit the bill. So yes, export or largely industrial or which require large capex are probably out of the sphere at this point of time.
Harendra, your comment, if you could quickly on technology, IT. Every time there seems to be a little bit of consensus that things have already gotten so bad for IT, and you might start relooking at these stocks. Another set of bad news comes. Now, of course, a lot of these IT companies here in India cater to these three big automakers in the US. So incremental bad news keeps coming.
Absolutely. I think we are kind of less zeroed in our view on the technology sector at this point of time. We are clear that we see a strong correlation between the US GDP growth rate and how the larger IT players have behaved. So yes, we are clearly seeing a period of some amount of weakening in terms of demand and pricing for the next 6 months, and that should keep the valuation subdued. We see a recovery only in FY3, the Q3 FY10, and clearly there is going to be separation, from the men's and the boys. The larger ones are probably going to emerge stronger, and we're going to see some amount of shake-up probably in the mid-tier and the smaller tier companies. So at this point of time, we are very choosy on some of the larger caps, and we would maintain and accumulate not a strong buy probably on Infosys and a TCS, and probably a reduce or some amount of caution on the mid-tier companies such as Satyam and others.
Harendra, what's the client call going out? Are you focusing there on even mid-cap specific stories? Because after a very long time in this last 1 week, lots of mid-caps have returned to favor, at least have bounced back very sharply. A lot of shipping companies, there's been movement in sugar, in fertilizers, commodity players like Gujarat and Areco. There's across the board really. Are you doing any stock-specific client recommendations, and if you can share those ideas?
Absolutely. If you look at it, we just had Bata India, and again, it's a consumer plus cash play. I think it's doing fantastic in terms of its new makeover, in terms of new store rollouts. It's a great brand recall in this country, and we have a new management. Mr. PM Sinha, who was ex-CEO of Pepsi Foods, has been running the show, and we see a credible turnaround going ahead in this company. And I think probably post FY10 there should be cash surplus, and probably we should look at the company shrinking its balance sheet. So all in all, steady growth and a great value pick at this point of time.
All right, Harendra Kumar, always good speaking with you. Thanks very much indeed for sparing the time and sharing your analysis. Good news coming in.
We'll wrap this edition of Opening Moves here. Thanks for watching. The market seems to have stabilized on slightly lower levels. Profit fundamentals is coming right up.
This is NDTV, and you're watching NDTV Profit.